And we're live. Hi.
Hi.
Hi, everyone. A very warm welcome to this exclusive LinkedIn Live session hosted by Paris Blockchain Week. My name is Kier, and I will be your host today. We're thrilled to have you join us for what promises to be a compelling conversation about the role blockchain technology is playing in shaping the future of finance. For those who are new to us, Paris Blockchain Week is the premier destination for blockchain professionals, attracting the world's foremost thought leaders, innovators, and industry drivers. As a pioneering event in the blockchain space, it is dedicated to fostering unparalleled innovation, collaboration, and of course, knowledge sharing. Our sixth edition will be held from April 8th to 10th, 2025, at, of course, the Carousel de Louvre, a prestigious setting for what will be an unmissable event in the heart of Paris. But of course, without further ado, it is my absolute pleasure to introduce you to someone who is truly a visionary and trailblazer in the blockchain space. Our guest today has been at the forefront of integrating blockchain into the financial system at one of the world's largest banks, a task that is both challenging and transformative. Coty de Monteverde has over 15 years of experience at Santander, where she now leads as the head of the Crypto and Blockchain Center of Excellence. With a background in telecommunications engineering from the Polytechnic University of Madrid, Coty brings a rare blend of technical expertise and strategic vision, having worked with blockchain technology since, drumroll please, 2016. Coty, we're super excited to have you join us today.
Hi, Kier. Thank you very much for inviting me to speak today. I'm very, very excited to share my insights on how blockchain technology is transforming the financial industry and how Santander is embracing this challenge. So it's a privilege to be here, and I look forward to discussing these topics with you.
Nice. And again, it's an absolute pleasure, Coty. You are a trailblazer. You've been in the space, for a really, really long time. So it's our pleasure to have someone like you, an absolute expert, I'd say, in this space, joining us today. So yes, I thought we could kickstart today's discussion by unpacking our theme. So today's theme for audience is innovation in action. So it's all about how blockchain is becoming a driving force across traditional markets. So we're reshaping sectors like banking, finance, and beyond. Today we'll be exploring how this transformation is unfolding, the challenges it brings, and of course its future impact. So Coty, as the head of Crypto and Blockchain Center of Excellence at Santander, you've been leading again blockchain initiatives as early as 2016, and you've spent over 15 years with the company. Given your extensive experience, how has the use of blockchain and digital assets within the financial sector changed over the years? What are key trends that you have observed, and where do you see technology making the most impact in the future?
Yeah, sure. So when we set up the blockchain lab, that was its initial name, more than 8 years
Wow.
ago, we were super enthusiastic as we acknowledged the potential of this technology to transform the financial industry. And I still think here's going to make the most impact in the future. However, back then, as you can imagine, the technology was still immature, so we faced a lot of skepticism inside and outside this sector,
Yeah.
and we struggled to find the right application. So there were several challenges which we have been completely, which I mean they haven't been completely solved, such as scalability issues, regulatory uncertainties, association of blockchain with volatile cryptocurrencies markets, and all of that made very difficult back those days to gain traction with blockchain applications. But with a lot of perseverance and commitment, we did a lot of experimentation, and we pioneered the implementation of projects of different nature, both consortia-driven and internal projects. And an example of this is back in 2019 when we issued the first end-to-end blockchain bond directly onto the public Ethereum blockchain. But many other initiatives fail, and I guess that other financial institutions had similar experiences to us. And because back then, I mean, the world looked very different, and crypto was not on policymakers' agendas. Crypto ETPs were not yet approved by the SEC. Ethereum had not even switched to
Yeah.
energy minimizing proof of stake
That
protocol, and there were no layer 2 solutions. So a lot has changed since then, and now financial institutions are on the, what I say, tokenization race, and digital assets are part of the digital strategy agenda of the financial sector in general. And regarding trends on the business, on the application side, I think, well, DeFi remains super popular, but I believe that digital cash in its various forms is a key trend this year and next year, with the stablecoins being one of the killer apps by, well, enabling, fast, cheap global payments, among other things. And on the infrastructure, more on the technical side, I mean, layer twos are getting very efficient. There are hundreds of projects actually working on zero knowledge technology that also look very promising. And finally, I think that account abstraction will be key to improve user experience.
Okay. I mean, I think that's great. That's a great start. That's
A
covered.
lot of things.
Exactly. And I think we'll be covering a lot of that in today's session. I think, yeah, that kind of what you've just said has given us a great sense of how the industry has developed over the years. And I think it's clear that blockchain is reshaping TradFi, especially with projects like Europe's digital euro pilot and, of course, China's continued expansion of the digital yuan. So, but I think it also raises questions about how to effectively manage this change. So, given Santander's commitment to blockchain, can you share some of the key focus areas in your current initiatives and how these efforts fit in your overall vision for the future?
So let's start with the overall vision of the future. So I believe that in the future, many, if not all, forms of value will be digital and programmable. And I also think that financial markets built in some kind of regulated DeFi are likely to come into existence as well. So in order to be prepared for that future, Santander Digital Assets Program is quite extensive, covering digital securities issuance, digital collateral mobility, various forms of liquidity optimization solutions. And of course, we are following very closely all the various digital cash initiatives. Regarding digital securities, as I just mentioned before, we launched the first end-to-end blockchain bond in 2019 on the public Ethereum blockchain. That was the difficult part, and to fit that with the regulation. And since then, we have executed several transactions on primary markets, helping our clients issue in debt using blockchain constructs. For example, we have participated in the issuance of a couple of digital bonds for the European Investment Bank. Regarding digital cash, in the last years, we've gained expertise and readiness to engage on different digital cash initiatives as they become viable in the different jurisdictions around the world, and contributing to the design of this future payments infrastructure. We are currently participating in several initiatives. Most of them are consortia driven, such as the Regulated Liability Network that is led by UK Finance, Agora, led by the Bank of International Settlements and the Institute of International Finance, and Finality, which I love this project. It's a regulated global payment system that will enable wholesale peer-to-peer peer settlement. And that's regarding digital cash. And the third bucket in our strategy is crypto. And we recently went live with crypto trading for private banking customers in Switzerland. That was last year. And this year, we are working towards being live very soon in Brazil with our broker Toro Investimentos. And additionally, well, that happened before this, but we've got in some jurisdictions, crypto ETPs already available. On top of that, there's some things that are, I think, like key elements for the future, like infrastructure layers. And one of those, I think it's identity. So we are also getting ready for the digital identity of the future, working, for example, in a consortium called Allium, that's with 10 Spanish companies, where we are building a self-sovereign identity solution on blockchain. And we are also participating in the European Digital Wallet consortium that is sponsored by the European Commission. So we're trying to cover like all the different pieces.
Yeah. Yeah, no, I think that's really interesting because I think Santander is definitely positioning itself within not in a very small area, but rather in the broader blockchain landscape. And I think we're seeing a lot of developments lately, particularly, of course, around digital cash and tokenization, which I think again kind of pivots us to our next topic, digital cash. As you've mentioned, we're talking CBDs, stable coins, tokenized deposits. All of these have become a major focus. And I think just for the audience's benefit, just earlier this year, for the European Central Bank, so the ECB, made strides with its digital euro initiative, refining its rulebook and focusing on privacy, interoperability, and user experience standards. The ECB is gearing up for a potential rollout in the coming years, emphasizing how a digital euro could coexist alongside traditional payments across the eurozone. So, with global developments such as the European Central Bank's digital euro, and of course the UK has also mentioned a digital pound, Coty, how do you see digital assets like CBDs, stablecoins, and tokenized deposits impacting the financial industry?
So over the last year, digital cash has gained traction, and there are many initiatives that are being developed around the world. And that's because new forms of digital cash are needed for many reasons. I mean, the payment system, the cash that we have right now, is not digital, that's electronic. And there's a need of digital cash for several reasons. For example, for interoperability with digital assets, providing that atomic delivery versus payment, a digital bond versus digital cash, digital euros. We also need digital cash available for smart contracts to provide a means of payment for those blockchain-based processes. And also, which is obvious, to support innovation in payments thanks to programmability and to support new business models such as pay-per-use or micropayments. And there are different forms of digital cash. You already mentioned some that they have different characteristics, and they have different objectives. And it's like a combination of these characteristics that make them called CBDC or stablecoin, tokenized deposits. So they can be retail or they can be wholesale use. They can be backed by funds that they are in a central bank account or a commercial bank account, and they can be issued by central banks, financial institutions, banks, fintechs. So combining these characteristics, we find the different flavors of digital cash that you mentioned. Starting with the most popular, stablecoins. They are mainly used by retail. They are issued by fintechs and backed by funds that are at a commercial bank account. And if you remember the Libra announcement, and this popularity of stable coins has made central banks react. So CBDCs
Exactly.
are the traditional market's answer, the reaction to the stablecoin phenomenon that
100%.
could become widely adopted and compete with sovereign currency. So that's challenging monetary sovereignty and financial stability. So each jurisdiction has different reasons for issuing a CBDC, and most of them have been initially intended for retail use as the digital euro, but there are other central banks that are exploring its wholesale use, not retail. And here it's worth mentioning a project that we are collaborating with, that it's the Brazilian Real Digital project. It's called DREX. And it's promoted by the Brazilian Central Bank. It's collaborative, so together with us, there are other institutions participating, and it's designed as a wholesale currency that is going to be transacted exclusively between banks, and it's being built on a hyperlayer Besu network. And on top of that, tokenized deposits and other tokenized financial instruments will be issued and distributed by commercial banks. So DREX is like the underlying settlement mechanism between the banks that are going to issue tokenized deposits. And these tokenized deposits, they are also known as commercial bank money tokens. They are now experiencing a lot of popularity as well. And that's, again, for two main reasons. It's like a reaction of the reaction. On one side, because of the threat of the stable coins and the CBDCs, it's a threat to what we call the two-tier money model. So if there's an excessive reduction of commercial bank money, that could limit lending. So that's why banks are reacting, issuing tokenized deposits. But even though there's a lot of discussion around digital cash for retail, we think that the greatest impact is in wholesale markets. And this can be achieved by a category of digital cash that we have not mentioned yet, which are reserves-backed digital currencies, or RBDCs. Some people call them hybrid or synthetic CBDCs. And this type of cash, RBDCs, represents funds that are held in a central bank account, like CBDCs, but they are issued by the private sector, by the financial market infrastructure. And that's the case of Finality, the project that I mentioned that I like a lot. I mean, we've been working in that since 2017, I think. And now it's real. I mean, this takes a lot of time and collaboration between different institutions. Collaboration is key. And Finality is a joint venture. There are around 20 financial institutions, and we are developing a series of regulated peer-to-peer wholesale payment systems in key jurisdictions. We are starting with the digital pound, or the sterling. And settlement assets, as I mentioned, they represent funds that are held at a central bank account. And the first Finality payment system is live in the UK. It was launched December last year. And we are currently live testing the digital pound under the supervision of Bank of England. Good news is that probably we're expanding this to the US next year. So that's super exciting.
That is very
real
advanced.
and something real.
Exactly. It's no longer just a concept. It's become reality. And I think that's probably the most rewarding thing, being in this space.
And it's integrated with our payments hub already. So I mean, we are super proud of that achievement.
That's super advanced and that's super impressive. I think you've touched on so many different points. And I think something that I really resonated with is the fact that you pointed out electronic versus digital, because a lot of the times there is the misconception they are one and the same, and in reality they're not. So thank you for bringing that up, and thank you for touching on that. And again, I think it's clear that digital cash innovations are gathering momentum globally. I think another key topic that often comes up when discussing blockchain in TradFi is the challenges you've mentioned previously, scalability. So of course, we're ramping up. People are becoming more open to it. People in Web2, what we call traditional industries, are starting to use the actual technology. So as adoption grows, there is a need to ensure that blockchain networks can handle increased volumes without compromising efficiency or security. So one of the critical aspects of broader blockchain adoption is the scalability of course, distributed ledger technology, DLT. So, Coty, what are some of the challenges you've encountered? Of course, you're doing a lot at the moment. So what have you encountered with scaling DLT? And what do you think is necessary to overcome these as adoption grows?
Yeah, so I believe that institutional adoption is going to help to achieve mainstream adoption. But there's some features that need to be solved. I mean, that are needed for enterprise use cases to scale, because we face harder regulation and requirements than others. So regulation obviously is one of the key things to scale, but there's others, like, for example, privacy, something that is not happening in public networks, obviously, because blockchain was designed as open and transparent. So privacy is essential for our type of use case because we have to ensure that only authorized participants access specific data. And this is very challenging because, as I said, blockchain has been designed as a transparent infrastructure, and current solutions, because there are some solutions already, but they are adding layers of computational complexity. That's further complicated network efficiency. And we face this issue with the DREX, with the Brazilian Real, the CBDC in Brazil project. It has been delayed because it needs to improve privacy. They've tested several solutions, but they didn't meet the requirements. So they need to continue carrying out privacy tests. So privacy is number one. Another one that is essential, it's interoperability, because the future is likely to be multi-chain, and interoperability between networks, it's going to be fundamental to avoid a siloed and fragmented infrastructure. And this is particularly important in the context of driving blockchain adoption among us, regulated financial institutions. There's, as I already mentioned, different consortium initiatives, and that could result in an ecosystem where messaging, data, asset transfer between these different blockchains is going to be critical. And that goes or it's connected to standardization, because we also need a standardization, just as we have global standards for SWIFT messages for the financial information. And last but not least, something that I always say is that blockchain is not a plug-and-play technology. No, I mean, the development of a tokenized economy requires the current infrastructure to be adapted. And we are referring to, and I like this sentence a lot, to changing an aircraft engine while it's still flying at 30,000 feet. And further, this new engine requires complete rewiring while still being backward compatible with the old systems. So you have to still be interoperable with all systems as well. And this is something that is not going to change from one day to another, obviously. It requires time.
100%. It requires a lot of time, and I think it requires a lot of acceptance, because I think at the moment that's something that we're all battling with. I mean, I've been in crypto. I've been in the space, as we call it, for the past probably 4 years, and to this day I can't talk about it in the real world. I say quote unquote the real world without people going, is that even real? Yeah. So I can completely appreciate what you've just said. And of course, like you said, scalability is definitely a major consideration, especially as more institutions begin to integrate blockchain solutions. But of course, I think this growth also requires, as you've rightfully mentioned, a very strong regulatory framework. So, how important is having a clear regulatory framework for the growth of blockchain, and what progress do you see being made in this area, particularly within the EU?
Yeah, so a clear regulatory framework, I mean, that's crucial for the growth of blockchain technology, because it provides legal certainty, it protects consumers, and it also helps businesses innovate without the fear of violating laws, which is very important. So identifying the regulatory scope is one of the main challenges for regulated financial institutions like us when we decide to launch a digital asset project. So it's the first thing we do. We analyze the regulatory environment. It's also important because when businesses and investors have a clear understanding of the legal environment, they are more likely to invest and build products in the blockchain space, leading to broader adoption. And well, you know that crypto has often been synonymous for lack of regulation, but it looks like this is changing, not as fast as we would like, but it's changing. And we are experimenting progress in several ways, such as, well, some regions setting up a license or registration regime for crypto asset service providers, just like in Europe with MiCA, extending anti-money laundering legislation to crypto, ensuring consumer protection, and also, for example, developing guidance on the marketing and promotion of crypto assets, and many other things. And we are lucky here in the European Union, because MiCA marks a historic moment as the first major regulatory framework for crypto assets in a major jurisdiction. And it is establishing a unified system across all the European Union members regarding the issuance, trading, service provision of crypto assets. And I think that it's going to foster the growth of this ecosystem within the EU. And it could inspire, and hopefully it does, other regulations globally. So I think it's also going to make Europe an attractive hub for crypto business and investors, for that legal certainty that it provides to businesses. And I mean, there's other countries that have announced that they are going to unveil new regulation frameworks during the next year, such as Australia, the UK, Brazil, Argentina, and South Korea. So the ball is rolling, no? But in summary, we need a solid, I mean, we need a solid legal framework that clearly defines the treatment of crypto asset, but also supports innovation and fair competition. There's still challenges, but I mean, will be solved, hopefully.
I think with all good things, there'll always be challenges. And I think you kind of highlighted a good thing. Regulation and innovation need to work hand in hand. And I think it's great to see how the industry is moving towards clearer guidelines, as you've mentioned rightfully. So it's not just Europe, it's expanding across the world. And that's really nice to see. And I think another area that is often discussed alongside innovation and regulation is something I personally enjoy, being someone who likes to write and loves to, as I use the word, educate. I think education is a massive area, and I think as more Web2 traditional industries keep, adopting technology, making sure teams within traditional institutions understand blockchain and digital assets. So, what efforts are being made at Santander to educate employees about blockchain technology and digital assets, and why do you believe this is crucial for broader adoption within TradFi institutions?
Yeah, so I think that it's crucial for broader adoption because it addresses several key challenges and barriers that institutions like Santander face when they are trying to integrate this technology into our existing business and systems. So not only business, but also systems. So two challenges. So this technology has unique characteristics, as you know, that differ from traditional financial instruments, and financial professionals, and that includes lawyers, risk managers, compliance officers. They need a clear understanding of how this technology works, decentralized systems, smart contracts, about cryptographic security, because we need to demystify this technology to enable institutions to make informed decisions on how to use it for services like payments, issuance of securities. It also helps financial institutions to comply with legal obligations and to mitigate risks related to cybersecurity and custody that are also different from the traditional finance. So we need all those teams to be properly trained. And finally, understanding these technologies allows institutions to adapt their business models and to remain competitive in a rapidly changing landscape. At Santander, what we are doing, so our Crypto and Blockchain Center of Excellence serves the group, not the bank, the group, because we are a group of several banks. And we are a hub for blockchain knowledge and expertise, and we share it across all the geographies, businesses, departments, and we create and deliver specialized educational programs that can be tailored to different roles within the organization. For example, executive bankers, they can receive high-level strategic education on blockchain potential to drive innovation and new revenue streams, while developers, what they need, and IT teams, is to be trained on how to integrate blockchain networks with our existing systems. So it's important to differentiate that not everyone needs the same type of training, of education. And another key role that we have at the Center of Excellence is fostering innovation through research and development. So we perform hands-on evaluation on the tech, we explore new use cases, we identify new opportunities, and we develop prototypes. By investing in research, we can keep the institution on the cutting edge of blockchain advancements, allowing us to quickly seize opportunities as this technology matures. And finally, to give you some numbers, in the last 3 years, we've given more than 150 internal training sessions, and we have a community. Wow. We have a community of professionals in the group that they are very interested in this tech, and they weekly receive a blockchain newsletter, and they have access to our internal community, our internal site, where we have webinars, articles, and other educational material.
That's amazing. That is absolutely amazing. I think it's amazing that you guys have segmented it into the needs of the people and into the needs of who needs what. Like a developer doesn't necessarily need what marketing needs to know, or C-suite doesn't need to know what the developers need to know. And that's brilliant. That's amazing. That is definitely setting the standard high. And I think education is definitely key to driving adoption and ensuring that blockchain technology is integrated smoothly into existing systems. But lastly, I think I'd like to touch on, as you again brought this up, on the role of collaboration, which has been essential for the success of many blockchain projects we know out there. So why is collaboration important for Santander's blockchain strategy? Can you provide us with some examples of how working with other industry players has helped advance your initiatives?
Yeah, but collaboration is a huge term because it's collaboration between peers, collaboration with the public sector, with regulators, collaboration with the developers that are building DeFi solutions, to how you can bring that to the enterprise use cases. So that it's a huge word, and it helps us. It helps the bank to advance with this technology in several ways. Blockchain it's decentralized, it's distributed, and its full potential is realized when multiple participants use a common infrastructure. So if not, it's a single database for me. So that's why it's key to
Yeah,
collaborate.
that makes sense.
And that way we reduce duplication of efforts when we collaborate for building and maintaining our own proprietary blockchain. That's too costly, right? And we don't innovate as much as we can if we do it sharing knowledge. In
Yeah.
this sense, Santander was one of the founding members of Alastria, that's a Spanish blockchain association, and it was the first one deploying a national public permission blockchain network. And we are very proud about that in Spain. We also, with Alastria, Alastria, I mean, it's a non-profit, so all the companies, institutions that are part of it, they collaborate and they put volunteers to help in, for example, developing the Spanish standard for blockchain identity. And these both things, the network, the initiatives, they've served as the basis for the European blockchain services infrastructure project. So it's all about contributing to something bigger. And also, another association that we were founding members is the Enterprise Ethereum Alliance, that it's fostering the development of enterprise-grade networks. And leveraging these types of associations like Alastria and the EA, it allows us to collaborate, share knowledge with a wide range of players in the financial and the tech sectors. Also, it's very helpful to establish industry-wide standards and to guarantee interoperability. I already mentioned that there's many consortia doing different things, and that can lead to a fragmented ecosystem. So we need to work together to build applications that can benefit the whole financial industry and scale faster. And some of examples are those consortia that I mentioned, the Regulated Liability Network, Finality, and the recently kicked off project that is called Agora. That's
Yeah.
super recent. It's led by the BIS and the IAF that I already mentioned, but with the collaboration of 7 central banks and 41 institutions. And they want to reimagine how correspondent banking is going to be in the future, using obviously tokenization and a unified layer. So obviously, I mean, a bank working alone would struggle to develop such solutions as quickly and effectively if you go with other participants.
Yeah, no, I think it's definitely the efficiency that comes with collaboration is such a huge, is very underrated. No man is an island, and I think we tend to forget that. And it's lovely to see that you guys are definitely doing it the right way. But of course, I think we've covered a lot of ground. And I just wanted, I thought it'd be nice to bring in some questions that we got from the audience. So we've received quite a few, and I've picked out a few that I think ties quite nicely to what we've been discussing today. So the first question we received was, are there particular regions or markets where you see more significant traction for CBDs and digital assets? How is Santander navigating the different regulatory landscapes across these regions?
Yeah, so there are like around 100 and something, 130 countries or something like that that are exploring CBDCs, and half of them are advanced with pilots or launching their CBDCs. I think that the most significant traction for CBDCs and digital assets is in those regions where there's a clear economic or strategic advantage, such as improving financial inclusion, enhancing payment systems, or asserting economic sovereignty. I see regions like China, obviously, and the EU that are leading in the development of CBDCs, while regions like Latin America and Africa are adopting digital assets to address financial challenges. The US is cautious, but it remains a critical player due to its influence over global financial markets and its leadership in the digital assets space, particularly with the growth of the stablecoin market. So in those regions where Santander has a strong presence, which is mainly EU and Latin America, we are actively participating in consultations from central banks and regulators. And if we can participate in pilots, as well, such as the Real Digital in Brazil.
Nice. Cool, really cool. I think that's you put that together quite adequately. That's really nice. Moving on to the next question. Do you think the regulatory frameworks being developed now are sufficient to support the future growth of digital assets, or is there more that regulators need to address?
Ooh, that's a good one.
That's a
Yeah, I
good.
mean, a lot of progress has been made, right? But and we welcome the direction of travel, but it appears to be room for improvement.
Yeah.
um, I mean, to support the future growth of digital assets and this space that it is evolving so rapidly, regulation has to be faster. I mean, it often lags behind the pace of innovation. And let me give you here some examples. There's several things that MiCA is not covering, like NFTs, DeFi, staking, DAOs. And
Yeah.
DeFi, I mean, I admit it's quite challenging, but regulators need to develop frameworks that recognize these decentralized systems while at the same time ensuring investor protection and market stability. I mean,
Yeah.
investor protection is super important. I mean, it's you and me, we are investors. So
Yeah.
yeah, and then there's also a need for standardization and global cooperation among regulators because digital assets are global and businesses are operating across multiple jurisdictions and they face a lot of compliance requirements that are different. And the lack of collaboration and standards leads to market fragmentation, something that I already said several times. And we've got examples like, for example, the travel rule solutions. I mean, it's
Yeah.
totally fragmented. That's something that has to be standardized or solved. I don't know how, but or needs more collaboration between different solutions. Also, things that they need to improve: tax treatment of digital assets. I mean, it's inconsistent and complex in different jurisdictions. And then digital identity for this Web3 space, which is, I mean, the digital identity solutions that are being developed, for example, with the new regulation in Europe, they are not necessarily compatible with the digital assets space. And you need something that, I mean, you preserve privacy, but at the same time, you allow regulators to trace illicit activities. And then finally, I think that what is also important to support this future growth of digital assets, it's flexibility that allows us to do experimentation. And well, there's some regulatory sandboxes to encourage innovation. However, some frameworks are very rigid because they apply traditional financial rules to something that may not fit, right? So I think that's so. Yeah, there's many things to improve.
And I think there's always going to be room for improvement. It's so new.
Yeah.
So I think that is a given anyway. But I think you've given really good examples of what could be improved or what could be included and what could be more inclusive. That potentially might even lead to rapid adoption. But we've got one final question from the audience, and that is, and I really like this question. As someone who has been deeply involved in blockchain since 2016, what do you think has been the biggest shift in perception of blockchain technology within TradFi?
I think this is linked to the first question today.
Yeah,
I mean, there has been a huge shift from skepticism to institutional interest. So 8 years ago, many financial institutions were very skeptical of blockchain because it was primarily seen as the underlying technology of high volatile, unregulated, speculative assets.
yeah,
Unregulated, which for financial institutions, it's like a no-go. And also, I mean, they also thought, I guess, that this technology was designed to bypass traditional financial institutions to get rid of intermediaries, right? But now, with the increasing regulatory clarity and the concept of tokenization, it has changed this view completely. And now the financial ecosystem see blockchain as a tool capable of transforming financial infrastructure, improving operational efficiencies, creating new financial products and services. And I mean, and we see that we are not only exploring blockchain, but we are actively investing in digital assets. I mean, embracing its potential and while we have more regulatory clarity, and we know better how to manage the risk associated with this technology.
Yeah, no, I think they put that again. You've put that together.
Basically, I'm not the crazy girl that likes crypto.
A crypto bro.
The crypto sister. They don't look at me like, oh, look at that.
No, I get there, and I'm in the same boat. I think there are two sides to it, and I think that's another thing about the market. It's very polarized. The community is very polarized. You're either on one end or the other end of the spectrum, and I think with adoption, it will become better. We will be less polarized, and I think
totally.
that's my hope at least. That's my hope at least for the industry. But no, thank you for that, Coty. And I think before we wrap up, I thought it'd be nice to end with a quick rapid fire round, just to keep things short and sweet, less serious, so to speak. So, are you ready for it, Coty?
Yeah. Go.
Okay, let's go. Number one, if you weren't working in the space, where would you be?
I would probably be working with something related to emerging tech. If it's not crypto, would be AI or quantum or something similar. But I mean, to be honest, I cannot imagine that, because when you discover blockchain, this space traps you.
Okay, fair enough. I mean, I agree. In 4 years in this industry, I can't see myself anywhere else.
No. Me neither.
Number two, coffee or tea during a busy day at work?
Coffee. Okay. And if it's a bad day, both things.
Fair. Oh, I get that. I can get on board with that. Number three, most exciting use case at the moment?
I'm fascinated with the stable coins. With so many stable coins rising, I'm very curious to see in the coming years how they are going to disrupt payments.
Nice. If blockchain tech was a superpower, what would it be?
Ubiquity.
Fair enough. And last but not least, virtual or in real life events?
In real life.
Of course, we can't wait to have you at Paris Blockchain Week next year.
Yeah.
I mean, I think this is something I'm really excited for. And of course, guys, that's a wrap. Coty, thank you so much for joining us today and sharing your insights. It's been an absolutely fascinating conversation for me personally. I've learned so much from understanding how blockchain is transforming TradFi and traditional markets to exploring the importance of education regulation. And again, as you said, and that I think is underrated, collaboration in the space. I think one thing's for sure, innovation in blockchain is here to stay, and it's definitely shaping the future of finance.
Yeah, thanks a lot, Keir. I have enjoyed it a lot, and I hope to see you very soon in Paris.
Oh, 100% you will see me in Paris. And to everyone who tuned in today, thank you for your time and for sending in your questions. We hope you found this conversation valuable and insightful. And if you'd like to keep up with more of the conversations, make sure to follow us, connect with Coty, and of course, stay connected for future sessions. Until next time, keep innovating and exploring the future of blockchain. And of course, before we finish, we have a limited batch of discounted tickets available. So if you're interested, visit our company page or, of course, our website to find out more. Have a great rest of your day, everyone, and we'll see you soon. I'll see you soon, definitely, Coty, and see you all in Paris.
Very soon. Have a great day.
Bye, everyone.
Bye.